Market week, stock market brief. This was supposed to be an off week for me. However, markets are moving so much, I thought it's best for me to share my analysis in here. Lots of people, especially our members, are going to be asking, based on this big up move in the market, well, is the analysis still the same? Has something changed? I'm going to share that with you. We're going to look at analysis on the stock market only on this show. We'll look at the Dow Jones Transports and the Russell and the correlations between those. That's important. And then we'll look at the S&P 500 and our level 4 indicators, which are proprietary indicators and so useful, and our market condition monitor, which is an absolute great application. So show you all of that. For this week, well, it was a weak start on Monday as we saw the dollar and bonds dropping and gold soaring. Lots of nervousness in the market to start the week. And then the Trump administration, they went on damage control and they softened their rhetoric. Benson, he came out and indicated tariffs between the U.S. and China had to come down. And after blasting Powell repeatedly, the president said, well, he's not firing him. Stocks reversed in a huge way and soared 2.5% on Tuesday and 3% on Wednesday morning before backing off some on Wednesday. And China came out and said, well, there's no talks. U.S. first has to roll back tariffs before they're going to do any talking. During the week, gold soared over $3,500 before a big reversal day. And then it pulled back under 3,300, now trading at around 3,340. Investors, well, they're being pulled around by the nose with each comment from the administration. There's a lot of hope right now that there will be some good news that comes out and that the worst news at least has been heard, but I think they're walking up a down escalator. And once they get tired, well, we know that escalator is going to keep moving down. So that gives you a little hint at what I think for the market. And we were looking for an upside move in the market, and that is what we got. As for the week so far here on Thursday at midday, the index is up between 3.5% and 4.5%. So lots of great stuff to look at here as we look at starting out with the Dow Jones Transports and the Russell. Well, the reason I want to look at this is because they correlate so well. And the rally that they're having now it makes sense according to the work that we have done. And we showed you based on the analysis on the VIX. And if you didn't see that, go back and watch last week's show where we said that, well, we thought this was the time period the market would try to move to the upside. But then there was more risk coming in the market after this rally period. And I encourage you, if you didn't see that, go back and watch it on YouTube or if you're a member, in our member videos, and you'll be able to see that analysis on the VIX. So let's switch over now and start out by looking at the Dow Jones Industrial Average. Let's take a look here as I look first at DJT. So this is Dow Jones Transports without our cycle analysis on there. And it gives you an idea as to, how wiggly is this. And we're looking back here all the way back into 2021. So this is a weekly chart. Now, if I bring in our cycle analysis, it's really going to pop for you. And I'll explain it to you as we look at the weekly analysis. Wow. So for some people that are first looking at this, they're going to say this looks like spaghetti. I've had those kind of comments, and there is actually a tremendous amount of valuable information in here. Let's start out by looking at the bottom, and on the bottom over here, we're looking at the cycle brackets, and what they tell us is that there's a rhythm in the market. What we learn using the cycle analysis is where the buying or rallying phases are, positive phases, or where the corrective phases are. And we use our momentum indicators, and we use Fibonacci retracements and projections and all of those things to give us added information. So you can see in here the rising phase, the peaking phase, the declining phase, how that works, and that's how it resolved itself in here. When a market makes a bottom and then makes a higher bottom, that's called a positive configuration. And when the peak is over on the right side, it's a right-hand translation. Right-hand translations are bullish because it doesn't come down and make a lower low, and then the next rally makes a higher high. So that's kind of cycle theory. When it peaks very early in the cycle, as this one did here, then that's called a left-hand translation, and what that tells you is that there's a lot of downside energy. When the momentum turns down, that you could see here, and it breaks the cycle low here, it's a very negative message and says it's likely to continue falling out to this timing. So what we have here, and I'm going to zoom in for you to see, and those green areas are rising phases, and the yellow areas are the periods of risk or declining phases. So you can see in here what happened was this bullish cycle in here failed right here. When you get an early failure, as this is, that often is a warning that the market's in trouble and likely to decline all the way out over here. Now this takes you out into July. Now we talked about a May, June low in the other indexes, but I'm getting a warning here that it could be longer when I look at the Dow Jones Transportation Averages. So you have this rally over here, and often when you have a deficient rally that fails, you're making a right shoulder. This is kind of an odd looking head and shoulders, but that's what we have in here is a head and shoulders. And that's how head and shoulders are formed, because the cycle pattern in here fails early, breaks over here, and it breaks the shoulder, and then comes down. You could see momentum turning negative right over there, and that says to us trouble on the downside. So there was a minor low, and you could see we have a dominant cycle and a minor cycle. There was a minor cycle low due right over here, and then a rally. And you could see we're in this rising phase here, except momentum is negative, and we're very, very far from retracement levels. And once this rally is over with, then it's likely to decline over here into this July time frame. So that says that, you know, those things that move the people, those things that move the packages, those things that are how the market, how the economy moves as a measure of the energies, and the economy, this is really signaling bad things for the economy, and that says trouble out into the July period. Let's just look here at the daily chart, and you could see, wow, look at the gorgeous head and shoulders that formed in there, and once it broke underneath this trend line right over there, it gave us the warning that it was going to continue down. And here's where this next low comes out over here in May. And when I look at this next one over here, that's July. So you could get a pullback into May, just as we're looking with the other indexes, and then a rally, and then down again into July. Now, if you look at our proprietary indicators in here, you could see over here is the slim ribbon PO. And when the slim ribbon PO is giving you these downward arrows, it's saying negative downside momentum resumptions. When the market's going up and you've got these positive things going on here, it's giving you positive upside resumptions. You can see that. It's a fantastic indicator and really helps you. Here you could see, looking at our option bias indicator, it is still giving you negative warnings, which says that this rally is likely to fail. Momentum still negative in here in the daily chart, and this rally is likely to fail into May. So that's the daily and the weekly, and we always do multiple time frame analysis like that, and that shows you that the Dow Jones Industrial Average will be getting some rallies, likely to fail, with a short-term low due in May and then another one due in July. That gives you some hint about the conditions of this bear market that we're in. It's not likely to even finish this downside leg until sometime in the summertime when we look at that. Now, I want to look at the correlation between that and the Russell. And here you could see in the Russell, as I look at the analysis in here, this is almost identical. You can see what happened was the right shoulder in here, or this cycle's rising phase, failed. Came down and broke that cycle low right over there, and it warned you with the momentum going down. So we have that warning right over there. Projections are negative, cycle configurations negative, and momentum negative all says that the market was likely to fall. Now we're getting up over here to these resistances. So we could see the Russell get up here, stall at somewhere between 1957 and 2030. So it's close to the 1957 level now, and it could hold up here a little bit longer. How does the short term look here? Well, this looks a lot like the other indexes. And you can see that there's kind of a minor half cycle, there's a minor 1/3 cycle, so all of these things are overlapping and they're different energies. And so what this says is that sometime in here it's likely to come down into May. And then if I look at this next dominant, that goes out into July. So there's a really strong alignment between the Russell and the Dow Jones Transportation Average. Of course, the Russell is very interest rate sensitive. So is the Dow Jones Transportation Average, very economically sensitive, and interest rates going up, which we have seen until the last couple of days, is bad for these low-price stocks, for these companies that have to borrow a lot of money. So we think that the Russell is still going to rally a little bit more, maybe into these minor resistances. If it gets here over the 2035 level, then I'll be looking at maybe something that's a little more positive, but not really positive overall, just short term. So this is an important look at how the Russell correlates with the Dow Jones Transports, and pointing out to that period in the summertime before this bear market leg is over with. So I thought that was really important to bring you those correlations, looking at those two. We're going to look at the stock market as the S&P 500, but first, this is a cycle analysis workshop special. We do this a couple times a year. This is an amazing offer. This is how you learn the analysis that I do and my whole team does, developed over 50 years. It took me a couple of years to write this and over 6 months to produce it, and we keep adding to it. There's now 26 video modules in there, and there's many tools for text videos that I've produced talking about a lot of other technical analysis that's included with this. It's online, lifetime access. You don't need a special platform. And you will never look at charts the same as you did before. This is going to improve your directional decisions, and you'll be able to project in time and price as we do. And as a bonus, you get all of the videos from behind the cycle analysis curtain. This is where I do these sessions where I share the analysis and kind of share what's in my mind and how I interpret things. It's a fantastic addition to this whole workshop. Any workshop like this, similar, would be $5,000 or more. I mean, I've looked all over the internet and all over other companies, and they don't have anything as comprehensive as we offer like this for technical analysis, especially cycle analysis. And this is a special $400 discount. It's only $897. It's really not a huge investment for traders. And for level 3 and 4 members, if you're a level 3 or 4 member, you get an extra $100 discount. Just write to Matt at askSlim.com. He'll send you that special extra discount link, only $797. Or if you become a level 3 or 4 member first, then you'll be able to get this special discount also. This is an incredible offer. I really encourage you to invest in this. Go to the askSlim.com website. Up here on the top right, see it says save $400 on the cycle workshop. Click that and you'll get the whole information on what's included in here, and you're just going to be astounded at how much you learned from this workshop. So I really wanted you to encourage to do that. Again, questions, write to Matt at askSlim.com. All right, let's continue this stock market brief, but I want to look at the S&P 500 and look at our MCM, the market condition monitor. So let's go back here. Let's put up SPX. And now let's unveil here our MCM right there, and let's blow this up. So let's start off on the weekly here, and let's just look at the conditions of the market right now. So the conditions of the market right now have been improving on the short term, and that makes sense with the rally that we had. And you can see in here that yesterday we got some improvements from slightly bearish to neutral, just in time for the rally that we see here today. And actually we got slightly bullish on the short term on IWM. So I just showed the Russell analysis, and it's been moving up, and I said, it could go up into that resistance zone. So this is the short-term conditions that you see right in here. Even Apple right over there is now slightly bullish when you look at that. If we move over to the different trader styles in here, you can see that right in there. You can put time frames or trader style. So we're going to stay in trader style. And let's just look at the intermediate term here. And you could see that the slightly bullish condition that we're looking at is fighting against bearish conditions on the intermediate. The intermediate is dominant, which means, like I said, the market's trying to walk, the investors are walking up a down escalator. That's what this is reflecting. That on the short term, they're getting some upside movement, but they're really fighting bearish conditions on the longer term. And what happens is once the upside move gets tired, then they move to the downside again. Let's look at the S&P analysis in here. And this is following pretty much what we said. If you saw Market Week a few weeks ago, I showed you the time frames in history where there were these big free fall type declines. And then even though we were looking for a low to come out of here in May, that probably was the low already, and that it would be this sideways upside attempt, then try to come down again. And may test the low, may stop somewhat above it, may get somewhere below it. But overall, I thought this would be the low for this move, maybe the low for the year, because I actually think when you get into this rising phase, that could take you out into the fall. But then you're going to get into another riskier period where you probably test this low or even get much lower than that low. So the economy, the conditions of the economy are so important, because if we get into a recession, then the average bear market over the last 100 years has lost more than a third of its value. And so far, this, at the worst case before the rebound, had lost just over 22% of its value. And if you look at the S&P earnings, they're going to probably be around $250 for the S&P earnings, and the best that bear markets bottom is at around 15 times. That would take it down to 37.50. So we have to see a lot before we decide that that's actually where it's going. But that's just the way the math works out based on averages. So this rally that we're getting up here into the resistance level, that's very likely to fail. And then we get into this range. A pull pulls back over here, rallies again out over here, maybe gets up into these areas over here before the next downside wave in the bear market hits. So that's what I think is the highest probability. I thought that the market would try to rally, and our analysis on the VIX that we've shown the last couple of weeks has been in that alignment, that we're going to get an attempted rally before it then again moved to the downside. So that's what we see here when I look at the S&P 500. Let's look at the daily chart, and let's look at these important numbers. First of all, you could see the minor cycle right over here. It got a little bit of an early bottom right over there at 17 or 19 days. You could see this cycle was 21 days. This was 20 days. And the amount of rally in here is pretty strong. Now, when that happens and you've got the dominant pattern coming down over here, sometimes, like I said, you're not going to get as deep as that low was, because that was a panic intraday low that you saw right over there. And if it pulls back, it's much more likely to get support in here. And we thought we'd be in a range like 5,500, 5,100. It could pull back to 5,100 again. It really depends on, how crazy the news get in here, or maybe not get that deep. But anyway you look at it, there's a pullback here that we talked about out into May, and then out over here into this June, July period is where you can get this rally that we showed you here on the weekly chart. So pull back in here once it makes the peak and then comes down. Important number right over here. That's the first number that we'd look at around, let's just call it 55.80. That's 120 points from here. If you get a close above that level, that will show the first improvement. That's an important number. If it does that, then that makes the probabilities of taking out that low near zero. So that's an important number. You would need to get up above this level right over here, 58.70, and close above there. That's a long way in order to make me believe that my bear market assumptions could be wrong. That's what it would take. Right now, it just simply says to me, rally, try to get into the resistance zone, have some kind of a pullback in here that's meaningful, and then rally again as we extend out what I think is going to be range trading all the way out into the summer when I look at that. So that's your daily pattern there. This is your weekly pattern right over here, and that's the way the cyclical patterns lay out. Remember, cycles are rhythms in the market. They show us money flow. Right now, the money flow is still negative when I look at it on the weekly as our reversal scout is still telling us that. The reversal scout, if it turns up, will give us a signal that things are starting to improve. Right now it has not done that. You can see at the bottom of this cycle right over here where it turned up, but these were very bullish cycles. This is a very bearish cycle when you look at that. So now when you look here at the momentum there, you can see that the momentum here by the slim ribbon PO is negative. You've got actually a downside, a reversal right on this day giving you a warning, but then this turned up again. So you see that little bit of strength coming in, and this reversal scout is just trying to curl to the upside again. So tiny little improvements in here, but not enough to be meaningful to fight against that longer term downside momentum. So we'll be looking for a pullback to come into this May period and then extend out the trading range that we think it is building in here. Let's just look here, go back here to the MCM, the market condition monitor. Again, this is a level 3 and 4 application. So if you get to level 3, if you order level 3, you're just not going to be able to see the intraday. If you're level 4, it's going to give you the intraday information also. So let's just take a look at what some of the bullish and bearish stocks are. Here's your trade setup condition. Here's your got that slipping in here, sorry. Here's your very bullish stocks in here that you can see. And I'll just scroll down a little bit so you can see some of those. The ones that are very bullish right there on the short term. Remember, we're only looking at short term in here. And these are the ones that are getting some good upside action right there. If I look at the trade setup conditions that are negative or very bearish, you can see those in here. Wheat, ASML, Intel, TLT, which is the bond market, D, which is Dominion, that's a utility. And you can see in here, Pepsi, very bearish, just had earnings. Wendy's, QSR, PSX, Schlumberger, Merck, those are all very bearish. Another click or two on the downside you can see in here. These are stocks that, are not really performing very well when the market has rebounded in here. They're still very bearish when you see that. This is a fantastic application. Really encourage you to become a level 3 or 4 member to get that.